So you want to save for a down payment for an upcoming house purchase, but you are sick and tired of losing your buying power to inflation. Well, this ETF might be for you. What is up, everybody? My name is Colin, also known as the Decade Investor, and welcome back to my YouTube channel. And in this video, I'm going to break down a new ETF on the block, a new kid on the block, stock ticker HOM, to help you understand if this is a possible place for you to put that down payment money and still outpace inflation. But before we get into that, as always, make sure to head down there and smash, destroy, annihilate that like button and leave a comment. Doing those two things costs you $0 but helps this channel tremendously. And while you're down there, you might as well claim your $50 free when you open an account with M1 Finance and $25 in free Bitcoin when you open an account with Voyager. Both of those links are down in the description below. But with that being said, let's roll the intro and dive into the video. When it comes to saving money for a down payment for an upcoming house purchase, most people just revert to putting their money in a savings account. But if we look at the average savings account interest rate, your money is actually going to be losing buying power every single year that you leave it in there when you're saving up for that house purchase. The average interest rate for a savings account is currently 0.06%. If we compare that to the CPI index, which tells us about inflation of the price of goods, which from October 2020 to October 2021 was 6.2%. So your money in a savings account is losing its buying power every single year. And more importantly, if that money in that savings account is for a down payment on a house, every single year you are losing purchasing power of that money in that savings account. Because if we look at house price increases in just the last 12 months, they were up 20% just in 1 year. Now that is an anomaly in terms of growth. Historically, since 1971 to 2021, home prices on average have grown at 4.07% every single year. So that down payment money in a savings account is losing your purchasing power due to inflation. This is where the ETF HOM steps in. HOM is the Life Goal Home Down Payment Investment ETF, and the goal of this ETF is a low-cost, diversified ETF built to show people exactly what dollars they have set aside for a down payment for an upcoming home purchase, all while having those dollars professionally invested. So with this ETF, you are taking that down payment money and having it professionally invested so you can outpace the rising house prices every single year. This is an actively managed ETF, so the portfolio is always subject to change, but currently the breakdown of this portfolio is roughly 60% bonds, 30% stocks, and 10% commodities. That is how this ETF is set up. I'll touch more about the portfolio breakdown in a second, but in terms of risk scale out of 5, this ETF falls on number 2, which is towards the lower risk side of the spectrum. Again, you are investing your down payment money, so you don't want to take on a lot of risk because these are usually short-term or mid-term type of investments. So you're at the 2 spot in terms of risk, which is lower risk for this type of ETF. In terms of the expense ratio, it is currently at 0.44%, which means for every $10,000 invested into this ETF, you would pay $44 in fees every single year. And this ETF currently has 41 holdings, but again, that is subject to change as this is an actively managed ETF. If we look at the portfolio breakdown as of September 30th, 2021, roughly 40% of this ETF is in US bonds, 20% in US stocks, 8.4% in international stocks, and roughly 10.08% in US Treasury bonds. But we can see that this ETF is heavily invested into bonds. Like I said at the beginning, over half of this ETF is in the bond sector. If we look more at the bond breakdown, the largest bond holding in this ETF is the Vanguard Short-Term Corporate Bond ETF at 11% of this ETF. If we look at the commodity breakdown, which does include crypto, there are 2 crypto trusts within this ETF, the Grayscale Bitcoin Trust at 0.05% and the Grayscale Ethereum Trust at 0.04% of this ETF. So you have your bonds around 60% of this ETF. You have your commodities and crypto around 10% of this ETF. And finally, you have your stocks, which makes up around 30% of this ETF, both in ETFs and individual holdings. The largest ETF holding is 5.47% of the assets at the Vanguard Value ETF. And in terms of the individual stock holdings, it includes companies like Lowe's, Home Depot, Sherwin-Williams, Black & Decker, Whirlpool, Trex. So these companies, as you notice, are in the housing sector. Why not invest your money in companies that deal with the housing sector? So as that sector grows, as home price increases, you are investing in companies that are also seeing that growth. I personally really like that because, again, the goal of this ETF is to keep up and outpace the inflation of home prices. Why not invest in companies that deal directly into that sector? So with the portfolio breakdown of this ETF, you have roughly 60% of your portfolio in bonds, which is going to give you that control on volatility, but also the safety on the downside potential of the stock market. And then you have roughly 10% of this ETF in commodities or crypto. Again, just more diversification. And finally, roughly 30% of this ETF invested in equities, both individual stocks as well as ETFs. That gives you the growth potential, the upside that you can see to help you outpace or at least keep up with the increase in home prices. So decade investor, that's great, that is dandy, 60% bonds, 30% stocks, 10% commodities, but how does this ETF do? What are the returns of this ETF? Well, the inception date of this ETF was at the beginning of September 2021, so we don't have much history to look at in terms of actual market returns for this ETF, but the owners of this ETF did back testing on this asset allocation to see how it would have done historically had this ETF been on the market. Because you are investing that money into bonds, stocks, and commodities, there is the potential for your money to go down in the short term, but how much does it go down compared to the overall market if you were to invest into the S&P 500? In 2020, when the market crash occurred, the S&P 500 dropped roughly 30%. So 30% decline in your money had you invested that down payment money just into the S&P 500. However, with HOM, had this ETF been around, it was back tested in that same time frame. HOM only had a 7% drawdown on its portfolio. So the shelter on the downside was 7% versus 30% for the S&P 500. So even though investing your down payment money into HOM, you would have in that time frame lost money. You would have only lost 7% of your money versus 30% or more had you invested into the S&P 500. However, with that being said, the back tests do show that over the long term, looking back in time, this asset allocation would have averaged an annual return of 5.6 to 5.8% every single year. Now, I know what you might be thinking, well,
why don't I just invest this money into the S&P 500? I'm going to get a better return on my money.
But this is a goal-based ETF. Your goal isn't to get crazy returns that brings on crazy risk like you would in the S&P 500. Your goal with this ETF is to save your down payment money in a place that is going to outpace the increase in home prices. If we go back to the beginning of the video when I said since 1971, home prices have increased on average 4.07%, in the back test of HOM, it averaged a 5.6 to 5.8% average annual return. So historically, had you invested into HOM, if it was around, you would have been able to outpace the increase of home prices rather than just throwing your money into a savings account at 0.06% interest rate and just hoping for the best, but losing buying power every single year. So what is my thoughts on the HOM ETF? Do I like it? Do I not like it? Personally, I think it's a great place to put your money if you want to invest that down payment money into bonds, stocks, cryptos, and commodities. But keep in mind with HOM, like I mentioned already in the video, there is the potential for, in the short term, your money to go down. So at the end of the day, you have to ask yourself this. Do I leave my down payment in a savings account paying me 0.06% and know that I'm going to lose my purchasing power every single year due to inflation and rising home prices? Or do I risk it, invest that money into the HOM ETF? Yes, there is the potential for the downturn, but back tests have shown historically this ETF would have returned 5.6 to 5.8% every single year and actually outpaced the rising prices of homes. That does not guarantee this ETF will grow 5.6 to 5.8% every single year, but that is the choice that you have to make. Do I willingly know I'm losing my buying power to inflation, or do I risk it for the biscuit and put my money into HOM ETF for my down payment for my upcoming house and have the potential to outpace the rising home prices? That is a decision that you have to make, but I hope that this video is very helpful in going over the new kid on the block, HOM ETF, the Life Goal Home Down Payment Investment ETF, to show you that there's another place to put that down payment money when you are saving up for a house. But with that being said, my name is Colin, also known as the Decade Investor. Make sure to smash, destroy, annihilate that like button. Every single like counts. Let me know down in the comments, would you be interested in putting your money in the HOM ETF, or are you just gonna go in a savings account and play it safe? And finally, if you wanna see more of my content where I upload 5 videos a week, all things investing, make sure to hit that subscribe button. But like I say at the end of every single one of my videos, let's get investing.